We are live today and this week. Welcome back to a exciting program. We are Capital Group. We are going live. We are attempting to go live as frequently as possible when it comes to the world of basically fundraising and venture capital, and covering those successful fundraise and those successful venture capital endeavors. So this week we've got a few press releases covering some successful fundraisers that have transpired. The first one on our list this week would be called Agrovision. Okay, we're going to jump into that in just a second. The second one would be called Applied Carbon, their press release. The third one would be called Leaf Agriculture. And we're going to jump into that one in just a second. Right. Number 4 on our list for today would be Millo out of Europe. Number 5 on our list today would be Tree Technologies. And then number 6 on our list today would be a company called Osapiens, right? Which is a funky name, but an interesting name. So let's jump into that. And then I think last but not least, we have one more article here called Entocycle, which we've covered. Okay, so we are ready to start our broadcast here. We're ready to go live. We are going live now with article number 1. So let's pull it up here and cover the wonderful, yeah, here we go. So, berry supplier Agrovision has raised $100 million equity financing round led by Aliment Capital and supported by new and existing investors, including Oaktree Capital Management, co-founder Steve Kaplan giving it a valuation topping $1 billion. So the round follows a period of meteoric growth at the vertically integrated superfood company, which nearly tripled sales in the past 3 years and will fuel global distribution and accelerate product innovation. So delivering more flavorful superfood year-round requires full-stack innovation, optimizing across every layer of technology from genetics and systems to AI, said Agrovision co-founder and CEO Steve Magami, who founded the business in 2012 with an initial focus on growing, distributing, and marketing blueberries from Peru. The LA-based company has since expanded its growing areas to Mexico, Chile, India, Morocco, the US, and China, and supplies blueberries, raspberries, blackberries, and cherries to leading supermarkets, club stores, and high-end independent retailers across the US, Asia, the Middle East, and Europe. Blueberries for GLP-1 users. So berries, which have been growing in popularity in recent years, are also getting a boost from users of GLP-1 drugs such as Ozempic and Wegovy, said the firm. The impact of GLP-1 has led to a notable shift in consumer behavior with a 20% increase in fresh produce purchases by prescription users. Okay. We've observed a shift in how people are investing in their health and spending at the store, added Aliment Capital founder and managing partner Ben Beldegrun. Agrovision is truly the right place, right time with its unique model of owning the full stack, enabling it to guarantee its customers high quality superfood through the year, regardless of their geographic location. Amazing. So the majority of Agrovision's products are sold into retail under the Fruitus brand, which is associated with a consistent high quality experience, says CEO Steve Magami. We don't want consumers to be playing Russian roulette with their berries. We want consumers to have a good product, a good experience every time they purchase. So tech-enabled approach. In recent years, Agrovision has invested more than $400 million in global expansion, new genetics, artificial intelligence, and other technologies. Recently struck a partnership with Seattle-based startup Ripe Locker to deploy its patented low-atmosphere vacuum chambers to extend the life of berries across its supply chain. Co-founder and CEO Steve Magami told AgFunder News. So we love this technology and the founders. This is a great example of a proven technology where we've shown we can double the shelf life of a raspberry. We're still working through the logistics of it, but we're pretty optimistic we're going to have it commercially rolled out by next year. AI is also a big area for us, he said. We're working on what we think will be a first in the industry in terms of optimized prediction of the harvest and hope to have news of this to share in the coming months. As for genetics, he said, the focus is on optimizing flavor and improving resilience in a warming climate. The industry went too far away from flavor and towards production and yield for a long time, whereas we've been leaning in on flavor, but using technology to get to a level of production such as the agricultural side of things also works. But after flavor and the eating experience, the second most important thing to us is the climate resiliency. So we're planting varietal with a high level of climate resiliency that are more tolerant to heat, he added. Countries that were important producers of blueberries in the past, like Argentina, are no longer even on the map today, whether it's for climate reasons, water, or availability of labor. So we're going to see a movement towards new growing regions that are more optimal. So in the U.S., Agrovision supplies berries under the Fruitus brand to leading retailers including Costco, Giant, Publix, Sprouts, Trader Joe's, Wakefern, Walmart, and Whole Foods. In China, Agrovision markets its berries to consumers under the Big Sky brand. Enormous growth to come. It is in its next growth phase, the company will invest in establishing new growing regions in Egypt and Indonesia and expanding its operations in markets such as China, Magami told AgFunder News. He did not confirm media reports from earlier this year referencing revenues of 300 million, but said the figure was not far off. We're scaling very fast, so that number is going to look very small in the not too distant future. He added, when we make an investment in production, it usually takes about 5 years to reach full maturity depending on the location. And we're going to see volumes increase in those plantings mature over the next few years. So we have the visibility into just enormous growth to come. Asked about the endgame for investors, he said, we have investors that are aligned with our vision and our mission to build a generational company that's going to make the world a healthier place. They're not looking for a quick exit, which has given us a real advantage in being able to build this business from the very long term. Alrighty, so what we have here is a very interesting business. Started in 2012, so the company's quite old now, relatively speaking, but the valuation, so the valuation is topping 1 billion, but it still seems to be private. So the two investors you can see here, Aliment Capital, invest obviously very late stage, and then Oaktree Capital Management, which is also quite late stage. So let's just move on. Those companies are noted in our database. All right. Article number 2. Applied Carbon takes in 21.5 million Series A to sequester carbon at scale via biochar. All right, let's do this. U.S.-based startup Applied Carbon has raised 21.5 million Series A for its automated machines that convert agricultural crop waste into biochar in one single pass on the field. Amazing. All right, so early stage investor to.vc led the round. Congruent Ventures, Grantham Foundation, Microsoft Climate Innovation Fund, and several others also participated. So funding will enable Applied Carbon to deploy a fleet of biochar machines across Texas, Oklahoma, Arkansas, and Louisiana. Alrighty, so a rendering of the Applied Carbon mobile pyrolyzer, our best shot for carbon dioxide removal at scale. So biochar matters because we need carbon dioxide removal, CDR, more broadly, says Applied Carbon co-founder and CEO Jason Aramburu. No mainstream climate scientist thinks we will ever get our emissions below 1990 levels, even in the most optimistic projections. He tells AgFunder News, at some point we have to change our tactic. Aramburu believes carbon dioxide removal provides the next best tactic, and that biochar offers the lowest cost, most scalable way to do carbon dioxide removal. To me, biochar is the best shot to deploy carbon dioxide removal at scale. Alrighty. So biochar is a carbon-rich solid made by partially combusting biomass and other organic waste. While there are different types of biochar, a common characteristic across all of them is the presence of recalcitrant carbon that can last in soils for years, decades, and even millennia, according to the U.S. Department of Agriculture. As a soil amendment, biochar has been around for years, but it's only recently gained attention as a tool in the fight against climate change. It offers durability that greatly exceeds what's possible with traditional carbon offsets like tree planting and cover cropping. But it does that with a cost that is really manageable. Then it has the added benefit that it's great for farming, it's great for the soil. So farm equipment is literally the only thing able to process these feedstocks. So if biochar is such a promising option for carbon dioxide removal, why aren't more companies working on it? Aramburu asked the same question early on and discovered multiple reasons. Most biochar in the United States today is made from wood paste as a feedstock, he explains, and it's mostly made in one of about 60 biomass energy plants dotted along the west coast or the southeast. That's a problem because the farms where you want to use the biochar in the middle of the country, that means you've got to move these materials, and then the bigger problem is we just don't have enough wood waste to use. It's a pipe dream that will get there using woody feedstock. Wood is great for proving the concept, but there's no way that can scale. So the next obvious step for Aramburu and his team was to go directly to the aforementioned farms to use corn stover, wheat straw, sugarcane waste, and other agricultural residues as biomass. There's billions of tons of that stuff produced every year, and it's basically free, and there's nothing else you can really do with it, he says, adding that the use of agricultural waste for biomass seemed like a no-brainer. We realized very quickly that there was a lot of reasons nobody was doing this. Agricultural biomass like corn stover or wheat straw has a low bulk density and contains a lot of silica. Two things Aramburu says make it very difficult to make biochar in a continuous process. It's very hard to move tons and tons of that material through any machine per hour. Biochar production uses a continuous pyrolysis system, which heats biomass to about 500 degrees Celsius or higher in the absence of oxygen. The heat breaks down the biopolymers, while the lack of oxygen means that the biomass decomposes into biochar rather than combusting. So we couldn't find a single continuous pyrolysis system that was actually doing this, says Aramburu. And if you did invent a pyrolyzer that could run on corn stover, the transportation economics would kill you because you'd end up having to move big bales of this material to the pyrolysis plant. At that point, the team path was clear. To make biochar at scale, it needed ag waste as a feedstock. To use ag waste as a feedstock, the team would have to invent a new pyrolyzer that could operate like a piece of farm equipment. Bingo. So today, farm equipment is literally the only thing that is able to process these feedstocks into anything of value, says Aramburu. So this is the applied carbon mobile pyrolyzer. So no one can copy us. Applied Carbon's resulting mobile systems connects to an off-the-shelf tractor to pick up and pyrolyze biochar in a single pass on the field. A standard forager harvester helps the tractors collect and chop the residues, which are then fed into a self-contained trailer pulled by the tractor that processes the crop residues into biochar using pyrolysis. Interesting. So, moving on. After the biochar is cooled, the system adds nutrients and microbes to it and applies it directly into the field. A disking implement incorporates the biochar into the soil. Of the setup, the only tractor and the forager harvester are off the shelf, says Aramburu. So we really believe we're doing something unique in this space. He adds, we haven't found anybody else doing this. We've got granted patents on our technology, and we know how hard it is to do this. Even without the patents, no one can copy us. We found a really good group of investors. Great. Due to the deep tech nature of Applied Carbon's offerings, raising the Series A took some time. It's not like we're building an app where we can just send someone to a link to see it, says Aramburu. There's quite a bit involved in demonstrating the technology to investors. I think that was the most time-consuming part, but it went well, and we found a really good group of investors. Funding will enable Applied Carbon to deploy a fleet of biochar machines across Texas, Oklahoma, Arkansas, and Louisiana. Mainly, the funding goes to take our technology from where it is today to something that we can scale and mass produce and ultimately finance with equipment finance or bank debt, says Aramburu. The company is also working with local agriculture extension to help farmers access new funding for biochar available via the USDA. There is big support from the USDA for biochar, he explains. This is the first growing season where the NRCS Practice 336 is available in 48 states, and that practice provides farmers with a per-acre subsidy to use biochar, so it pays them back for the cost of using biochar. We think that could really be a game changer for biochar and could really help to spur adoption of the technology. All right, end of article. So at the way top here, it's very clear who the investors are. Whoops, right over here, yeah. So to.vc, Congruent, Grantham, and Microsoft's Climate Innovation Fund. All right, moving on to article number 3 today. Leaf Agriculture raises 11.3 million Series A to build the lingua franca of agricultural data. So farm data management platform Leaf Agriculture has raised 11.3 million in Series A financing. Spero Ventures led the round, which also included participation from all existing investors. Leaf will use the new funds to expand its product offering and partnerships as well as grow its team. Good. All right, so lost in farm data translation. Leaf's Farm Data API and platform aims to make data management easier for companies working in crop insurance, seed and chemical, biotech, and other areas. About 72% of farms now collect data on their fields, up from just 32% in 2013, says Leaf co-founder and CEO G. Bailey Stockdale. This rapid increase has created a good deal of new value, but it's also introduced hundreds of incompatible file formats, broken integrations, and a large challenge for anyone building with the data. APIs are brittle and change often in all industries. Agriculture is no exception. So Spero general partner Andrew Parker wrote in a recent blog post, as farm equipment manufacturers improve their APIs with each new version and model release, those changes will break your service if you don't have a clean layer of abstraction that can handle these changes as they emerge. Leaf handles this better than any single development team can do on their own. Leaf, says Stockdale, helps companies access, manage, and use their users' farm data. Our unified API connects with data providers like John Deere, Climate, FieldView, CNHI, Ag Leader, Planet Labs, Valley Irrigation, etc., translates their proprietary files into a consistent format, cleans the data, associates it with field boundaries, and then makes it available for further processing. So a lingua franca for farm data. Rather than working directly with farmers, Leaf is designed for companies that support the food and agricultural system. Leaf pulls in data from third-party APIs or uploaded data to translate, format, and clean it as well as make it available. The idea is to make companies offerings compatible with all farms in one single integration. Spero, which has joined the board of Leaf, calls this API as a service a type of product that is a lingua franca for the common mess of proprietary data formats and competing standards that cause user data to stay inert in silos due to the difficulty wrangling them. Exactly. The cost of using Leaf pays for itself in both lower initial development costs and reduced maintenance costs, he adds. Crop insurance companies are one example, explains Stockdale. These companies can now offer insurance for only the planted area of a field instead of the government-defined property tax boundary, which can mean discounts for farmers enrolled in an insurance company's precision ag program. Crop insurance companies use Leaf to precisely determine the planted area from the data generated by the machines operating on the field, says Stockdale. This is an extremely high-quality source of data, and Leaf helps bring data from any tractor, hundreds of incompatible file formats, to a single consistent format, allowing insurance companies to deploy the precision programs on any farm. He says another example of how Leaf works with biotech and regenerative agriculture, where companies need to prove that specific activities happen during a season. Example, a farmer applied more or less fertilizer, planted certain crops, yield of his field was above or below threshold, etc., in order to certify that the resulting crop qualifies for regenerative ag subsidies or a premium price. These companies use field boundaries, machine data, and satellite imagery from Leaf to validate that their programs management practices were followed. Where the funding will go. Leaf raised $5 million seed round in 2022, led by S2G Ventures, with participation from Cultivian, Radical Growth, SP Ventures, and others. The Series A funding will go towards building out Leaf's go-to-market team and bring the platform to more companies. Let's see here. Stockdale says the company is also investing in shipping new products. Alrighty, that's interesting. Our upcoming products will... let's see here. Our upcoming products will offer new ways for companies to use Leaf, including running end-to-end workflows on Leaf without needing to do any additional data processing on their site. He says Leaf will also release new data cleaning and quality tools that will further help companies using Leaf to package their data for analytics, AI models, and more. Alrighty, so it says the S2G Ventures, Cultivian, Radical Growth, SP Ventures, and others way back in 2022 for that former round of funding. So we will make a note here to look at that in the future. Now, next article, minimally processed alternative meat startup Milo raises nets 2.6 million EIC grant, plants new facility. So Milo is a Swedish startup known for minimally processed meat substitutes from oats and mycelium. Has bagged 2.4 million euros, which is $2.6 million, grant from the European Innovation Council EIC Accelerator, and up to 15 million euros, which is $60.3 million, in equity funding from the EIC fund under its blended finance scheme. So the firm, which has a pilot plant in Gothenburg, which is Sweden, will use the grant funds to scale up its production processes, which it claims uses a fraction of the water and energy used by brands such as corn, with lower capital expenditure. So Chairman Stefan Hilberg told AgFunder News the European Investment Bank has committed up to 15 million euros in equity in one or more financial rounds contingent on co-investment from private investors. He added Milo has co-developed multiple SKUs with large food manufacturers whose names we cannot disclose due to NDAs. These products will initially launch in the Nordic market with larger volumes expected in 2026. We are also in discussions with companies outside of Europe for joint establishment once our Nordic factory, a new larger facility near Gothenburg, is operational. So in these times when several companies have gone bankrupt or are in financial distress, our strategy all along has been to work closely with our partners so that when our co-developed products are finished, we have orders in line and can grow the company with profitability. We have also filed a number of new patent applications to protect our technology and have implemented a new element of science in fermentation, which we believe is a game changer in mycelium growth. It's more like controlled environment agriculture than food processing. Milo's technology is based on the work of mycelium expert Mohamed Tazerda, professor of bioprocess technology at the University of Borås, and is outlined in the company's first published patent. While several firms are growing fungal biomass to make meat analogs, Milo is adding mycelium to a plant-based substrate, initially oats, in a novel fermentation process to create hybrid products with a ratio of around 50% fungi and 50% plants. During the fermentation process, which lasts around 12 to 16 hours till a certain density is reached, the fungi are added to the oats, eat away at the starch, and start to favorably alter texture and nutrition. The fungi-oat combo can grow in any shape or form depending on the shape of dimensions of the containers it grows in, without requiring expensive downstream processing, and has a balanced nutritional profile with protein, fiber, and vitamins and minerals. After the product is ready, it can be shipped fresh or frozen to food manufacturers and sold as a solo packaged product or combined in prepared meal cells, said Hilberg. There is a big discussion regarding how many vegan products do not provide minerals and vitamins that can be used by the human body. The food manufacturers that we work with have raised this as a major issue. So, yeah, there's a big discussion regarding how many vegan products do not provide minerals and vitamins that can be used by human body. Yeah, good point. We have drastically reduced the phytic acid content in our products, bringing it close to zero. The result is a major improvement in the uptake of essential nutrients such as iron and zinc. There you go. Yes. So while several firms are growing fungal biomass to make meat analogs, Milo is adding mycelium to a plant-based substrate, initially oats, in a novel fermentation process to create hybrid products with a ratio of around 50% fungi and 50% plants. So it's not tempeh. Well, it sounds like tempeh, which is made via solid-state fermentation. Milo products have a meatier taste, bite, appearance, and texture, and don't disintegrate when cooked in a sauce, claimed Hilberg. Milo is not tempeh. It's made very differently, looks different, and has a texture and tastes very different. Milo has a pleasant, juicy, and bouncy meat-like texture without binders, and it doesn't melt when used as an ingredient in stews. Unlike players growing fungal biomass in liquid suspension, meanwhile, Milo does not require expensive stainless steel fermentation, said CEO Ismail Taherzadeh, Professor Taherzadeh's son. It's more like controlled environmental agriculture than food processing and custom equipment we've designed that's made by co-manufacturers. So think of highly automated big chambers. We look at these players using wet fermentation in big steel vats and ask, can we do this in a better way? And we came up with a totally new process. Taherza added, our fermentation system is between solid and submerged fermentation. It's much faster and way more efficient compared to the solid-state fermentation and uses a lot less energy and water than submerged fermentation. So controlled environmental fermentation. Milo grows its products in the S unit, a proprietary combination of advanced hardware and software controlling and manipulating mycelium to grow with certain precision and properties in what we call controlled environment fermentation, explains Taherzadeh. The S unit technology is modular, which makes it very convenient to scale compared to traditional mycelium production technologies. The modularity also creates redundancy should one unit encounter issues, he said. It only uses 1/3 of the energy normally used by traditional submerged wet fermentation and 2.3% of the water, which translates into 95% carbon dioxide savings. Further, the necessary investment equipment is only 1/3 compared to submerged fermentation. The system setup is also designed for adding automation and handling, which reduces operation costs and improves financials. Additionally, it provides higher safety for mycelium growth, resulting in an overall improved food safety, as each unit is equipped with a decontamination system. In everything processed as planned, he said, we anticipate having multiple S units in operation by the end of 2026. Each S unit will produce 144 tons per year. Amazing. Alrighty, so we've got this company just getting a European grant. So Sweden is on their way to some meatier food, but it's not meat, right? Okay, so next article is Blue Tree Technologies nets $2.26 million to expand sugar reduction tech for beverages. So Blue Tree Technologies, an Israeli startup using a patented process to selectively remove sugars from juice, milk, and beer, has raised $2.26 million around, led by OurCrowd, with participation from SUCDEN Ventures, the VC arm of food commodities trader SUCDEN. So Gregory Marin, Chief Investment Officer of SUCDEN, said, in the context of juices, Blue Tree Technologies, which selectively removes sugars, is especially relevant and perfectly complements our portfolio of solutions. So the funding comes shortly after the firm secured self-GRAS status for its approach and scaled the solution with Israeli juice manufacturer Priniv. So we plan to license the systems to juice producers around the world. Blue Tree Technologies, which is in talks with leading juice manufacturers around the globe, is one of several food tech firms seeking to cut sugar in juice, with approaches ranging from enzymatic treatments that convert sugars to fibers, better juice, to microbes that eat the sugar increbio. Blue Tree, in contrast, uses ultrafiltration coupled with adsorption to selectively remove disaccharides such as sucrose, lactose, and maltose from natural beverages such as juice, milk, and beer without sacrificing taste or compromising brands' clean label credentials. So, founded in 2020 by Didier Tobia, co-founder and CEO at cultivated meat startup Aleph Farms, and Yuval Klein, Green Tree graduated from Israel's Fresh Start Incubator in June of 2022. In the interim period, the company took the idea from lab scale to prototype scale and signed an agreement with Priniv, says CEO Michael Gordon, who joined the team in July of 2022. In 2023, we fully scaled up our solution and expanded our development to other categories beyond orange juice. So he adds, we fully integrate our system at Priniv, so we are just waiting for final approval from the Israeli Ministry of Health, so Priniv can start marketing a 33% sugar-reduced orange juice in the Israeli market. Our customer is the final decision maker for product launch, contingent upon regulatory approval, which is expected to be received any day. We anticipate a Q4 market entry aligned with the back to school campaign. So we plan to license the system to juice producers around the world. And we're currently negotiating with large-scale manufacturers in Latin America, Southeast Asia, and Europe. They're looking at the numbers and saying this is cost-effective. We are aiming to charge no more than 5% of the gross margin. So manufacturers can also generate revenue from the sugar that is removed from the juices, he notes. Amazing. The question was how to remove the disaccharides but leave the monosaccharides and other things in the juice intact. So filtration and adsorption. The basic premise behind the tech is that disaccharides, sugar molecules comprising two simple sugars, such as sucrose, made from fructose and glucose, and lactose, made from galactose and glucose, are not as sweet as monosaccharides, simple sugars such as glucose and fructose. Right. So as a result, removing 30% of the sugar in a juice through removing disaccharides does not necessarily make a beverage taste 30% less sweet, says Gordon. It's not a linear effect, so if you cut it by 30%, it tastes more like 50% because fructose, the simple sugars remaining in the beverage, are sweeter than sucrose. And with a 20% sugar reduction using this approach, you won't even notice a difference. So the question was, how do we remove the disaccharides but leave the monosaccharides and other things in the juice intact? Blue Tree's first patent describes a two-step process, he explains. The first part is ultrafiltration, and the other part is an adsorption process. We found out the mineral zeolite acts like a magnet to disaccharides in juice, sucrose, versus monosaccharides and organic acids. Ultrafiltration will enable a certain level of sugar reduction, but there's a limit, says Gordon. So companies such as Fairlife may use it to remove some lactose from milk, for example, but they still have to add enzymes lactase to break down the remaining lactose into simple sugars. We have a second patent pending that explores an alternative separation technique not involving zeolite combined with ultrafiltration. Both methods offer flexibility in application, but we emphasize that throughout the sugar reduction process, including acidity adjustment, we do not introduce any external ingredients. This ensures a clean label and maintains the natural integrity of the juice. We're not recommending taking out all of the sugar. So the Blue Tree system enables firms to cut significant amounts of sugar, but given that sugar impacts mouthfeel as well as sweetness, Gordon says firms need to find the right balance. So in orange juice, 50% of the sugar is disaccharides. So we can cut total sugar by 50%. In pineapple juice, it's 60%. In milk, we're able to remove 75% of the sugar. While in beer, we're able to take it all out of it. So we can create zero sugar beer. Our first recommendation is typically 30%, although the ability to take out more is there. When it comes to sweetness, he says, part of our perception of this is through aroma. When you smell the juice that has gone through Blue Tree's treatment, it has the same smell, so it doesn't feel like the juice has been diluted. Labeling. Labeling may differ from one territory to another, says Gordon. In the U.S. for juice, as long as you're using 100% natural juice and you're not adding anything, you just removing the sugar, you can label it as 100% juice. In the EU, currently, juice that has gone through our process cannot be labeled as juice, but rather as a drink or as a beverage. Okay. However, this looks set to change under the proposed breakfast directives, which would permit terms such as reduced sugar fruit juice, provided nothing has been added to the juicy notes. The business model. According to Gordon, so here we go. We are offering a leasing model. It's a turnkey solution, but it takes us no more than 2 months to fully integrate our system into a partner's manufacturing line. Once the system has been fully integrated, we charge a service fee to handle everything. So, for example, the system needs consumable replacements every once in a while. So we handle it, but the day-to-day maintenance is very straightforward and can be handled by the operator. Down the road, he says, we see our customers as partners, so we aim to charge royalties. So consumers want less sugar and a clean label. So while per capita consumption of juice has been falling in some markets, a trend that was temporarily reversed during the earlier weeks of the COVID-19 pandemic when shoppers guzzled OJ to shore up their immune systems, consumers are looking for lower sugar options across the beverage set, says Gordon. But they also want natural, less processed, clean label products, and Blue Tree can deliver both. We see our approach as a no-brainer. If products can still be labeled as sugar reduced 100% juice, you still just have to have one ingredient on the ingredients list. Amazing. Alrighty, so we can see here OurCrowd VC and SUCDEN Ventures, which is the VC arm of SUCDEN. Very good. Now we have wrapping up our last two articles, it seems, here for today's episode. So Osapiens secures 120 million Series B for ESG compliance technology. So funds will be used by the ESG software as a service platform provider to accelerate product innovation, fuel growth across existing new markets. Here we go. So ESG tech company Osapiens has completed a 120 million Series B financing round led by growth equity at Goldman Sachs Alternatives. This brings the company's funding to over 145 million. Osapiens was founded in Mannheim, Germany in 2018 by Alberto Zamora, Stefan Warzinek, and Matthias Jungblut. Its core offering The Osapiens HUB is an AI-powered cloud-based platform that simplifies compliance with international ESG regulations, including the Corporate Sustainability Reporting Directive, CSRD, the European Union Deforestation Free Regulation, EUDR, and the Corporate Sustainability Due Diligence Directive, CSDDD. The Osapiens Hubs also enables companies to identify and mitigate risk in operations and supply chains and to reduce manual workloads through process automations. Osapiens' international team of over 300 dedicated professionals support more than 1,300 customers worldwide, including Bosch, Coca-Cola North America, Metro, Costco, Ritter Sport, Lidl, Celanese, CNA, and DM. We are thrilled to be working with Goldman Sachs, says Alberto Zamora, co-founder and CEO of Osapiens. So, Alexander Lippert, managing director in growth equity at Goldman Sachs. So the fundraising caps a year of rapid growth for Osapiens, with the total number of customers growing at over 473% in 2023. So the funds will be used to accelerate international expansion and further invest in the technology platform and help it make business operations more compliant, resilient, and efficient. Wonderful. And then I think last but not least, we have Entocycle raises $2.6 million for international expansion as new insect facility opens in Leeds. So insect farming technology developer Entocycle has secured an additional $2.6 million in funding to support its growth plans across Europe and beyond. This financing effort follows on from the $5.4 million the company raised in a Series A round in January of 2023. The investment comes from Blue Ledge Capital, Startup Basecamp, and Armajaro Holdings Ltd, along with existing investors Climentum, Teampact, and to.vc. The additional funding is a significant boost as we prepare to deploy insect facilities in multiple countries, further enhancing our profile and company valuation, said Kieran Whitaker, CEO. Many of our Series A investors from 2023 have reinvested, and we've attracted new investment from several reputable funds. This positions us well for a future Series B round, he told Feed Navigator. All right. The primary goals from the latest funding round include securing multiple contracts from the commercial scale insect farms designed and built by Entocycle, either within the UK or internationally. We have several exciting projects in the pipeline. Whitaker said there are a couple of strong prospects for a large-scale insect farm in the UK, potentially rivaling those already established in France and the Netherlands. Additionally, we're working on projects in Europe, North America, and Australasia, either underway or in the planning stages. This new funding allows us to undertake and complete these significant engineering projects. In the very near term, we're celebrating successful completion of the wet commissioning of our Center for Insect Technology in London, added the CEO. So repurposing pig manure. Yes. Integration of insect farming with anaerobic digestion. So I about the benefits of integrating insect farming with anaerobic digestion, AD. Bliss commented, we are seeing significant interest from farmers and growers who are either considering alternatives to anaerobic digestion or looking to integrate insect bioconversion with the existing AD processes. So, partnerships. Entocycle's founded and part of the University of Leeds. So that was an interesting article. They're doing a lot over there in the UK. So that pretty much wraps up our episode for this week. We will be back very soon with another episode covering another week of funding or press releases. So just to let you all know, we are set to launch more proprietary databases and platforms, and we invite all those who are interested in helping us launch our platform, both on the investor side and on the fundraising side. We're basically, of course, as you've seen from previous videos, dealing with 8,000, nearly 10,000 investor database, but we also need from the startup side some startups to use our platform, our intended platform, to finish their fundraisers. So that's where we are working, in addition to launching other sort of value-add services. So with that, we will leave it there for today. Have a good day, everybody.